is the US equity correction over? Let's look at what we mentioned last month. We warned basically that if we break 2850, we could have a decline along the green path towards 2600, 2630. In fact, that's exactly what we got. But we need a few things to be sure that it now can rebound along the same path, along the same green path. First of all, let's look at what's happened around the US. Japan has been basically a good guy. The range is still holding. Of course, the decline of October can be seen here from the top of the range to the bottom of the range. Now it's oversold, and we hope that it can rebound. Besides Japan, Euro stocks is in a much worse situation than Japan. You see here lower highs and lower lows. It's also oversold, and we hope it can rebound. Fortunately, it's not doing worse than the US because the relative strength here on the dotted line is about flat. Well, then the emerging markets. As we can see, since February, it's in a declining trend, even called a bearish correction because it's more than 20%. We see here recently that the relative strength of emerging market versus the S&P 500 is about flat, which is not bad, but it could also be the fact that the S&P 500 is catching up because it was the last one to decline. And therefore here, the most that we can hope with oversold indicators is a rebound toward the upper trend line. Of course, among emerging markets, we need to differentiate between South America, Brazil, which do better together with Russia, much better than China and India. But for emerging markets, we have a problem. Namely, the fact that the US dollar here is still rising and trying to break its downtrend line, breaking also the previous stop in August. And we see clearly that this correlates, the rise of the US dollar could correlate very often with a decline of commodity prices, and we know that is bad for emerging markets. So here, really, we do not have very good news from the currency side. What happened in the US equity market? Well, we all know that basically growth stocks have been declining, and the only one which have been a little bit outperforming were defensive stocks. Healthcare, staples, sometimes utility. The thing is that this downtrend line and sector rotation is not yet over. And the question which remains is, are the small defensive caps able to hold the whole market, while for so long technology and discretionary or the FANG stocks were really pushing the market up? So you see, here we really want on the 26th of October that the market rebounds, and it should rebound from our expected lower support on the cloud, on the weekly cloud. But do not forget that this blue line, which is the moving average 200 days, is not rising anymore. It is flat. So it could become a resistance in case of a rebound. That means it could rebound toward 27.65 or a little bit higher toward 28.12, which is the former swing high. But for that, we really need to have an immediate rise in the coming days. And we see that this immediate rise has to go from not only the current prices, current closing yesterday night around 26.82, but it needs to break further above 27.05, which is a key level to keep in mind, 27.10, and then probably 27.35. Not only it has to rise now, but when it pulls back again down, it has to hold probably above 2700 or 26.85 if you wish, in order to continue a second attempt. And you'll see that the second attempt is expected to be around 28.18, 28.50. Then we will not be out of the wood yet, but at least we will be out of the wood short term. Because what we don't want to see is further rise in interest rates, further rise of the VIX, and something which would look horrible with a rise of the VIX and a rise of interest rates, namely a down move, fast and sweep towards levels which are very key. I noted here 26.02. Remember, 26.04 was the last swing low last week. Then it could go quickly to 24.02, 22.10 or 20.26. That would be a very rare, unpleasant event. Such things like such a decline occur very rarely, namely one chance into 39,000. So it's probably not going to happen. But really, for the rebound, what we need is strong volume to confirm a lasting rebound in coming weeks. I'll see you in a month.